Netflix reported third quarter results today, and while revenue was slightly below consensus estimates, the net EPS was in line with management's expectations on a higher than expected contribution margin. We've updated our earnings model to include the new guidance that management gave tonight, and we're going to take a look at that, compare it to what we had in the model prior to the release, and use this information to determine if the after-hours share price makes sense. We can start by taking a look at the shareholder letter, which is on the Investor Relations website. And you can see there that management gives guidance for a number of metrics here on the right-hand side. So that is what we've updated in our model. And obviously we've updated all of the September quarter end values, so for the income statement, for the balance sheet, and cash flow statement. So all those details are in here now. And you can see anywhere we have purple cells, these are the values that management has given us. So in the income statement, they guide operating income to $49 million, net income to $10 million, and earnings per share for the fourth quarter of 2 cents. And then throughout, we have different comments that talks about the guidance that they give. So then on the streaming businesses, we have domestic streaming total paid members of 43.4 million at the end of December 2015. Domestic streaming revenue of $1.1 billion and contribution margin of 34%. And then we have the same metrics for the international business, which they've given us. So now we can compare these values to what we had in the model prior to the release. On the left-hand side of the screen, this is prior to the distribution of the shareholder letter, the values that we had for the third quarter and the fourth quarter. And you can see what the estimated share price was prior to this release. And if we scroll down to the domestic streaming details, you'll see that management's guidance for contribution margin is well ahead of what we expected in our model. On the international side, they've guided to a contribution loss of 20.7%, which is far worse than what we had in here. They did say that in the fourth quarter, contribution margin losses for the international group would expand, and that's due to the launch of Spain, Italy, and Portugal markets. We just didn't realize that it was going to be such an extensive loss. So we've updated that value there. And then for the DVD business, there's no guidance, but it's a small part of overall earnings, so it's not a huge deal. But then if you get down to the ratio analysis at the bottom of the segment section, you can see that we had to tweak our expectations for the fourth quarter for the technology and development expenses and general and administrative expenses. In the case of general and administrative, we were at 6.4% this quarter, so we made it equal to 6.4% in the fourth quarter, which is 40 basis points ahead of what we had prior to this release. And then for technology and development, we had it to starting to trail down in the fourth quarter of 2015. But in order to get back to the guidance that management gave us for operating income, we had to increase it for the fourth quarter. So on the whole, expenses are a little bit higher than what we were expecting in the fourth quarter, and EPS of 2 cents is pretty close to what we had prior to the release. But overall, when you compare without changing any of the additional growth rates in future periods, you can see that our price target from the model went from $109 per share to just $104.50. So the after-hours move of down 13% might be a little steep, given the information that we have here. If you'd like to download this model, please visit our website, gutenbergresearch.com. You can click on the Models and Focus tabs, and there'll be additional details for the Netflix model specifically, and it'll run through all of the different links between the financial statements and how the model works. And then once you have the model, you can run some simulations of your own, change some of the segment details and see what the price impact would be if you change the international contribution margin or the total paid member growth rates, or you could even scroll down to the valuation sections and change maybe the volatility or interest rates if you want to see what the impact would be on share price. Thanks for watching.